Hello, everybody, and welcome along to this afternoon's webinar. My name's Calvin, and I'm joined by Duncan alongside me, who's going to be co-hosting with me throughout today's session. So let's have a look at what we're covering in today's session. So I'll be taking you through what is re-enrollment to start with. So what is it, when do you need to do it, and what steps are involved. I'm then going to be handing over to Duncan, who's going to take us through the re-enrollment using the pensions module. So we'll be having a little look at some demos there of how to complete your re-enrollment using the pension module. And finally, it'll be back over to me, who's going to look at the redeclaration, so declaring your compliance with the pension regulator. And finally, I'll be taking you through a little bit of an interactive quiz. Now, the quiz is optional. Don't have to do it if you don't wish to, but all answers are anonymous, and it's just something to get involved in if you want. We'll then finish off with some further support and any remaining questions that you may have. But a reminder, if you have any questions, feel free to get them in whilst we're talking today. So let's get started without further ado, and we'll start off with what is re-enrollment. So re-enrollment is every 3 years, you must assess if employees need to go back into a pension scheme. So this is every 3 years. Your re-enrollment duties vary depending on whether you have any employees who fall into a worker category that you must enroll. So a quick reminder of those categories. You have 3, which is eligible, non-eligible, and entitled. And it is the eligible employees who must be re-enrolled. And a quick note as well, if an employee has opted out in the last 12 months, then it's up to you if you want to re-enroll them or not. So again, that's a bit of a choice on your part there if they've opted out in the last 12 months. What I want to show you now as well is a quick timeline with the re-enrollment dates. So we'll start with the 3rd anniversary, so that point in the middle there. So 3rd anniversary of your staging or duty start date, or previous re-enrollment date, which is what we're coming up to now for a lot of people being the 2nd time. That leaves you with a 6-month window. So you've got a 6-month re-enrollment window. And that goes from 3 months prior to that 3rd anniversary or 3 months after that 3rd anniversary. So that's your 6-month window, going from 3 months prior to 3 months after. Now, what you also have is a deadline for redeclaration of compliance. Now, what that is, and that date specifically, is 5 months after your 3rd anniversary. So regardless if you choose the latest possible date, which would be 3 months after your 3rd anniversary, your deadline would be 2 months after that, if that makes sense. So you're 5 months after your 3rd anniversary of your staging date is the deadline. All right, so it does 5 months after your anniversary. So that's the re-enrollment steps. Not the steps, that's what it is, sorry, and that's a bit of a timeline. What we do have, I'm getting ahead of myself there, is the steps itself. So what do you have to do? So the first one is to assess and re-enroll eligible employees. Remember, only if they are eligible at the date that you choose. So that's another key point there. We have had questions before about employee or pay decreases even. If your employee at the point of what date you choose, so remember you can choose what date as long as it's in that 6-month window. If they are eligible at that point, they must go in. If they are not, or not eligible or entitled for whatever reason, they may have been off sick or had a decrease in pay for whatever reason at that time, if you assess them and they are no longer eligible, then you don't have to put them in, even if their pay goes up later down the line. So that's just a key note to make sure that you're aware of, because again, we do get a few questions on that about pay spikes. So it's only at the point that you are re-enrolling and reassessing. Next, you'll then need to write to your employees to re-enroll. So you'll need to inform your employees who you're putting back in the pension scheme that they are in fact going back into a pension scheme. And then once you've done all of that, it's time to complete your redeclaration of compliance, which we'll go through at the end of the session as the last section, but you'll need to complete that. So there's 3 steps to it. So quick recap: assess and re-enroll eligible employees. 2, write to employees you re-enroll. And then finally, complete your redeclaration of compliance. There is a quick link there at the bottom if you would like to go into more detail or have a read of an article that we have available on those steps. Now, before I hand over to Duncan, what I want to do is just run you quickly through the manual process. So if you do not have the pension module, you're going to need to do this on a manual basis. So you'll need to manually assess your employees, remembering the rule that it's based on age and wage, so how much they earn, how old are they. You'll then need to assign a pension scheme to any eligible employees who are not currently in a scheme. So anyone who needs to be re-enrolled or enrolled, you'll have to assign that pension scheme manually through the employee record. So we've got a bit of a screenshot there where you would go. So it's in the pensions tab and then manage schemes. Click the add button and you can add in a pension scheme. Finally, you can download an email template to send to your employees from the TPR website. So if you're doing it manually, there is a template you can download, but it is from the TPR website. So that's the manual process. So now it's time for me to hand over to Duncan, who's going to take us through the re-enrollment using the pension module. So it's over to you, Duncan.
Thank you very much, Calvin. So in the demo today, we are going to be using the Sage 50 Payroll Pensions Module, which many of you will be using to assess your employee on a regular basis. But it also has functionality to help you manage the re-enrollment. So the first thing I'll draw your attention to are the re-enrollment settings. So these are actually located within the Pensions Module settings, which you'll find from the company tasks. I'll give you a quick demo in a moment. And from here, you can check and amend your re-enrollment date to any date within that 6-month window. And you also have the option to set exclusions. So one of the rules of re-enrollment is that if someone opted out or left a pension scheme within 12 months of your re-enrollment date, you don't have to put them back into the scheme. They can remain opted out. So there'll be an option here where you can choose to include them in the assessment if you want to put everyone back in, even if they left the pension scheme recently, or you can exclude employees that left or opted out within the last 12 months. So let's just show you where to find these settings. So you would go to your company tasks here in the bottom left corner, and then into Pensions Module settings. And when this opens, it shows you your original staging or duties start date, which in my demo was the 1st of December 2019. So we are coming up to 3 years from that date. And underneath, you'll see an option to manage your cyclical re-enrollment settings. And this is where you can come in to check your re-enrollment date, make changes to your re-enrollment date if required, and also set your exclusion settings. So for this demo, I don't want to put people back into the pension scheme if they only left within the last 12 months. So I'm going to change this setting so that recent leavers or opt-outs are excluded from the assessment when we come to re-enroll. And you'll see the impact of that setting when we actually complete the re-enrollment. Also draw your attention to individual employee exclusion reasons. Now these can be applied at any time, and it covers employees in other circumstances where it's not necessary to enroll them. So I'll just pick out maybe one of the common ones from the drop-down list. So if you do have an employee working their notice period, they don't have to be automatically enrolled, and as such, they don't need to be re-enrolled if they previously opted out. So if you have anyone that falls into these categories, these individual exclusion categories, you can set it accordingly to that individual employee, which will kind of override the re-enrollment, and it'll exclude them from that. But the only one I've done here is I'm going to exclude those that left within the last 12 months, and I'm happy to keep my re-enrollment date as the 1st of December, which is the 3-year anniversary of my original duty start date. So you can come in and check these settings at any time, and you'll also be prompted to check these settings as you start to approach your chosen re-enrollment date. So for your handout there, just an explanation of those two settings. But let's now talk about when you'll need to complete this re-enrollment. So once you've chosen the re-enrollment date, you will need to establish which tax period that date falls into. because you will need to run an assessment in that same tax period, which will then determine which employees need to be re-enrolled. Now, if your re-enrollment date happens to fall after the assessment date, the contributions will be deducted from the next pay period, and those first contributions following re-enrollment will include a pro rata amount for the end of the previous tax period. And if this is sounding familiar, this is what happened for a lot of people when you first staged for automatic enrolment. So let's give you an example to bring this to life. And this is the example I'm going to use in the demo. So if your employees were paid monthly on the last day of the calendar month, and you've chosen a re-enrollment date of the 1st of December, your re-enrollment needs to take place in tax month 8. Now this means, based on my pay date, that the pension assessment will need to be ran on the 30th of November, which will then re-enroll eligible job holders who previously opted out or left the pension. However, the first pension contributions will not be deducted until the 31st of December. That's the first date after the re-enrollment date. And that first contribution would include a pro rata amount covering the period 1st to the 5th of December. So it'll be slightly higher than what it would be usually for that particular employee. So let's run through that scenario in the program. So my employees are paid monthly and they were last updated on the 31st of October. And when I ran my last pension assessment, I did run the report because I want to show you that a couple of my employees have previously opted out. So employee 1, employee 3, and employee 10 have all opted out of the pension scheme. However, employee 10 did opt out fairly recently. And if we check in the record, just here, we can see that the opt-out notice was received in September of 2022. So this is one of the employees that I'm not going to re-enroll because I'm going to exclude those that opted out in the last 12 months. So what I would need to do is to set my process date as usual. So this is my month-end process date, the 30th of November. I would run through and enter the employee's payments. And when I've done that, I would then go into the pension assessment. And because we are now in the period that we're re-enrolling our staff, we're going to get a prompt. Should pop up any moment now. And it tells us we've reached the cyclical re-enrolment date, confirms what that date was, what the window was, and the setting that I said earlier to exclude from assessment. So you've got a last chance to change these settings if you want to delay it a bit further, or perhaps change the setting, but I'm happy with them. I'm going to click on to proceed. And then it's going to continue with the pension assessment. So you are prompted to take a backup at this point, and I would strongly recommend that you do so in case you need to come back and repeat this step for any reason. So I'm going to call it re-enrolment, the start of the file name. And once it takes us into the assessment screen, it's employees 1, 3, and 10 that we know previously opted out. We should see which of those have been re-enrolled. So here's our pension assessment screen, and straight away you can see I've got 2 flags next to employee 1 and employee 3. If I hover over the flag, we can see that employee 1 is an eligible job holder, re-enrolled this period. Exactly the same for employee 3, but employee 2 remains opted out. And the reason for that is they only opted out within the last 12 months, and we chose to exclude them from this re-enrolment activity. Now, what you will notice for those that have been re-enrolled is there is no pension contribution at this point. And the reason for this is that the assessment date is the 30th of November, re-enrolment date is the 1st of December. So although they are eligible to be re-enrolled, you'll not see the first contribution until next month, and that contribution will be slightly higher than a standard month because it will include a pro rata amount. So if you wanted to print the assessment, you can do so here at the bottom of the screen, or email it, or export it. I'm simply going to close out, and it confirms that I've now assessed my employees for re-enrolment, and our next steps is to complete the redeclaration of compliance on the Pensions Regulator website, send enrolment files to your pension provider, and also to write to any employees that you re-enroll within 6 weeks of the re-enrollment date. So if you currently use Send Pension Data to send your pension data to your provider, that is how you would send them the enrolment files. If you run a report or do it manually, you would need to re-enroll the employees that have been assessed. And pension correspondence I will show you in the demo. As once we've completed the pay run, I'm just going to skip ahead and update the records. So once that pay run is complete, we've then got Send Pension Data if you use that, and Send Pension Correspondence. And as you can see, there are 2 letters that are pending, need to be sent by the 12th of January, but we would generally send these letters at the point we've sent the pension data to the provider. And if I just give you a preview of the letter, I'm just going to click on the item description. This is based on TPR's template. So it just explains that they've been re-enrolled on this date. This is the criteria and the reason why, a little bit of information about tax relief, and then some FAQs. So it gives them information about the right to opt out by following the provider's opt-out process, and some other FAQs again on that second page. So to produce these letters for your employees, simply select them like so. Record the date you sent them. So maybe I'm sending them on the 1st of December. I'm going to say it was sent by user because I'm sending the letter, it isn't the provider sending it. And then if I click on to send, I'll be able to print these ones out. And that'll also keep a PDF version attached to the employee record. So those are the letters complete. That becomes a historical letter. So you can look back on this if you ever need to. And if we take a look at the affected employees, numbers 1 and 3, we can see now on the pensions tab that they've been put back into the pension scheme. They are auto-enrolled again. See, this is the second time they've been in this scheme. They still have the right to opt out. So once we've sent the details to the provider, they can follow the opt-out process in the same way they would have done originally. So again, I've got another one that previously opted out that's back in. And if I just skip ahead to my next pay date, which will be New Year's Eve. It's all creeping up on us, this. Go back into the pension assessment. So when we do this on our next pay date, this is where we would expect the first pension contributions. But you may well have had an opt-out notice through by this point. So when you do the next assessment, in this scenario, you have the chance of opting them out before they've actually made that first contribution. So here we are, employee 3, I'm just going to pick up as an example because he's on the exact same wage as employee 2. But you'll see that the pension contribution is slightly higher this month, and that's due to the pro rata portion from the enrolment date to the end of the tax month. If any of these did need to opt out, if you've received the opt-out notifications, just select them. You'd follow the opt-out process in the exact same way you'd have done the first time round. So that's it in terms of what you would need to do in the program using the pensions module. I'll give you a quick recap of those screens, and then I'll be handing back to Calvin to talk about redeclaration. So first thing we looked at was the prompt that appears when you reach your re-enrolment date. You've got your last chance to go into the settings if you want to change the re-enrolment date, maybe delay it further, and to choose whether to include or exclude employees that left recently. You then go into the pension assessment and it will flag up anyone that has a change to their status. So anyone that's been re-enrolled will have a flag next to their name. You'll then get that prompt as you leave the pension assessment telling you what your next steps are. So you'll need to enroll them the same way you would have done when they first went into the scheme and send the pension correspondence. And that's where the re-enrolment notices live, so they can be printed or emailed depending on your document settings. And with that, I'm now going to hand back to Calvin, who's going to finish by talking about redeclaration. So back over to you.
Thank you so much, Duncan. So yes, let's have a little look at the redeclaration. So you've completed all the steps that Duncan's gone through. You've reassessed your employees. You've re-enrolled those who are eligible and have to be put back in. What is the final step? Well, the final step is your redeclaration. Now, the good news is, in terms of the product, there isn't a lot to do. But just as a recap on the timeline, so remember your deadline for the redeclaration is 5 months after your third anniversary of the staging or duty start date or previous re-enrolment date. So it's something that people do get sometimes a little bit mixed up, is those 5 months starts from that third anniversary. So whether or not you choose a different date doesn't matter. It's 5 months from that particular date. So that's always something to keep in mind when running this. So that is your deadline for your redeclaration. And as I mentioned, there isn't too much to do in the product for it, if anything at all, because you must complete and submit the redeclaration of compliance within 5 months. And it's done via the TPR website. So we've took a little bit of a screenshot and posted a link to it there. So if you are downloading the handout, you will have a clickable link to take you straight to where you can redeclare. But it is all done through the pensions regulator website itself. So once you've completed these steps that Duncan has taken you through earlier, if you're using the pension module and everything is re-enrolled, then the next steps are all done externally to the product. So you just have to pop onto the pension regulator website and fill in their form. And that's you done and dusted. So that's all there really is to it for redeclaration. Again, just to quickly recap that, it's 5 months from the date of your anniversary, so not the date you choose to re-enroll, but the date of your anniversary itself. Okay. So that is it for the redeclaration section. And as promised, it's now time to jump into a bit of a quiz. Now we're going to run through just 3 questions here. And in those 3 questions, the answers we have covered in today's session. So a little bit test of your listening skills potentially. A quick reminder for this is completely optional. If you want to get involved, feel free to do so. If you'd prefer not to, you can continue to ask us questions, Duncan, and we do have Matthew as well, who's been in the background there helping answer those questions as well. So they'll be there to answer them whilst we go through today. But I think it is my turn to ask you some questions, as it were. So I'm going to start with the first one. Now, this will appear as a poll on screen. So you'll see the question. You'll then be able to select the option and hit submit. So if we launch that there, you'll have a minute to complete this. And the question is, when can you choose your re-enrollment date based on the third anniversary of your staging duties and start date? So you have 3 options there. You've got any time from 3 months before to 3 months after, within 6 weeks after, or within 1 month after. So again, we'll leave this up for about a minute to give everyone a chance to get that answered. So this is about choosing your re-enrollment date, which is always based on the third anniversary of your staging or duty start date, should I say. And it's what is that window? So is it 3 months before to 3 months after, within 6 weeks, or within a month? Okay, so we've got 10 seconds left of this one, and then we'll move on. With the interest of time, we'll keep that trying to flow as quick as possible. Okay, so time is up for this one. So we'll get that one closed. Let's share the results and reveal the answer. So if I share those results, we can see there that 98%, so a vast majority, got it exactly right. Well done. So it is any time from 3 months before to 3 months after. So you do have that 6-month window, but from that date, it's 3 months before to 3 months after it's done. So that's question 1. Let's move on to question 2. Hopefully get this one, but it's how long have you got to complete your redeclaration? So the options are 5 months from the date you choose for re-enrollment, 5 months from the third anniversary of your staging or duty start date, or 6 weeks after completing your re-enrollment. Those are your 3 options. So this is how long have you got to complete your redeclaration? A little bit of a tricky one with the answers there. And again, we'll keep this open for about a minute. And you can, again, don't forget, if you've got a question, feel free to ask while we go through. We'll give this one about 30 seconds longer due to the length of the answers, just so you've got time to actually read them before answering. They're not short answers, they've got quite a lot of words to them. So give you that a little bit extra time to have a read. Okay, so the final 10 seconds is coming up now. And then we'll be able to shut that one down. And again, we'll we'll reveal the results and again, reveal the answer. Okay, so time is up. So let's share the results of that one. And again, it is an overwhelming majority and is also very pleasing for me to see that as well. So 82% of you got it right as well. So it's 5 months from the 3rd anniversary of your staging date. So we did chuck in that option 1 there as a little bit of a curveball. Because again, it's a common misconception. It's 5 months from the date you choose. That's incorrect. It's 5 months from the 3rd anniversary of your staging date. So you can choose whatever date in that 6-month window. It's always going to be 5 months from that 3rd anniversary. Okay, let's move on to the final question, which is a true or false question. So true or false, I've not had to re-enroll any of my staff, so I do not need to complete the redeclaration. So all of your staff are still in the pension scheme. None of them are opted out. So there was nothing for you to really do. You just reassessed and then that was it. Continue processing as normal. So do you need to complete the redeclaration form? So again, true or false on this one? Again, we'll leave that one. It helps if I launch the poll, of course, so you can see it on screen. Apologies there. If ever you wondered if it was live or not, there's your answer, because if we were recording this, I'll have edited that out 100%. But yes, so the question should have appeared now. So it's a true or false statement. I have not had to re-enroll any of my staff, so I do not need to complete the redeclaration. Now, when we'd ran this previously, we got quite a close call between the two answers. And again, we'll leave that open for a minute. I'm aware that it hasn't. I've only just started it really, so we'll give that a full minute as we did with the rest of them, which in does has 10 seconds left now, so we'll be closing that in 10 seconds. Okay, so we are going to close that one now. So let's share the results. So a bit different to the previous session that we ran for this subject. We do have an overwhelming majority that have said false, and that overwhelming majority is yet again correct. It is in fact false. So even if you've not had to actually do anything, so you've not had to re-enroll any of your staff, you do still need to complete that redeclaration. Okay, so that is part of your duties. So you'll still need to go ahead and complete that. So even if you haven't had to re-enroll anyone and nothing has really changed on your payroll, you still need to go ahead and complete that form on the Pensions Regulator website. So that's it for the quiz. So hopefully you enjoyed that. It is something we're trying to bring in a little bit more into our sessions, a bit more interactivity for you all to get involved in as well. And a quick note, if any of you enjoyed that and you also have Sage 50 accounts, at 3 o'clock, they are doing a very special quiz for National Accounting Day, which is today. So if you have, head on over to that session and get involved in that little quiz as well. And that's it for the main body of the subject today. So the only thing that's left is for me to go through all the further support that you have available to you. So once the session has ended, you will not be left alone. You have plenty of options available. Firstly, we have our help center. So within here is everything you really need, starting with the knowledge base. So you can search through various different knowledge base articles. I always give this little hint in my webinars where if you get an error message for any reason, so this might not be pension related, but just general, note down exactly what the error message says and search for that, and it narrows down your search related to a specific error. So it's a good little tip that I like to give everyone. Regardless of that, you can search anything through our knowledge base. We have support guides. So you'll see there's a pensions one there. So if there's anything you need to know about pensions, the support guides are available in the Help Center too. Access to further webinars. So a reminder, we do them every Thursday at 2 o'clock. So be sure that you have a look at what topics we've got coming up. There's videos available. And finally, if you do need to speak to someone, there is the get in touch options through the Help Center as well. So either via phone or live chat. That's not all, however, we do also have Sage University. Now, if you'd like to expand on your Sage Payroll learning, you can do so for free at Sage University. So head on over to sageu.com. There you'll find a variety of e-learning courses, some certifications. You can even earn some badges as well. And there's bite-sized learning to get a hold of as well. Now, you can do all this at your own time, in your own pace, or in your own time at your own pace, as it were. And you can do that whenever you want. So head on over to Sage U and have a look through all the available courses. And that's it for today's session. So thank you so much to everyone who has attended. We're going to stick around and make sure that we get all the questions that are coming through answered as quickly as possible. So we'll stick around for a bit longer, make sure everybody has had the chance to ask a question and receive the answer. Don't forget, if you're leaving us at this point and you want a copy of that Q&A, now is the time to copy and paste into a Word document if you want to keep a hold of that. And a quick reminder as well that you will receive a recording of today's session roughly about an hour after we end the session. Give it time to process, and it comes across in an email. So watch out for the Watch Now link in that email if you wish to watch the recording. And if you are leaving us now, you will be directed to a bit of a survey, a quick survey. This gets sent whenever you leave the session or the session ends, and it does mean a lot to both myself and Duncan if you take that small amount of time just to fill that in. We can't improve these sessions or change the topics or add any kind of subject in that you want to hear about if we don't hear from you guys. So it does mean a lot to us if you take that time to fill those in, because we certainly love to hear what you think, and we certainly like to make changes based on what you want as well. And that's it. I'm going to go on mute for a bit, help the guys out with questions, and I'll be back shortly to say my final goodbye. Okay, everyone, thank you so much. So it looks like we have got all the questions answered. There hasn't been any coming in for a little bit of time now. So we'll wrap things up there. It's been an absolute pleasure to see so many of you join today's session. So thank you again. I certainly hope you've enjoyed it and learned a little bit more about the re-enrollment side of things. As always, it's been an absolute pleasure. I hope you're all looking out for yourselves out there, staying safe as well, and we'll see you in the next one. Thanks for watching.